And now, an Envision Financial podcast with Luke Smith on Canberra's 2CC.
Good afternoon, Luke Smith.
Good afternoon.
That always gets me. Is it partly cloudy or is it mostly sunny? I mean, it's the same thing, right?
Like jumbo shrimp. Is it big? Is it small?
Yes.
But it was supposed to rain all week, wasn't it?
It's like government efficiency. It doesn't. There's no such thing.
Thought you were going to say government transparency. That's another bill.
That's another one, isn't it? Absolutely. However, that's not why we're here. We're here to talk financial matters once again.
Yep.
And today's topic is about a self-managed super fund and how much does it actually really cost? Because I think people might have an idea that it's a fairly expensive process to go through.
Yeah.
Is that true?
Exactly. And I think just from a context perspective today, I just want to sort of demystify some of the comments I've heard this week because it's been rather comical hearing what people think goes on from people that either not from an industry or my brother's sister's cousin's got one and it cost this.
Right.
And like anything in life, you can listen to the water cooler talk, or you can actually just understand the real expense of having it and why you may use it, because you could be missing out on a wonderful vehicle that is very appropriate for you just because you think it's expensive, when in actual fact, it may not be. So we're going to sort of dispel some myths today and just get people to have a look. If you've got one, okay, what are you paying? Because if people can take something from today's show and question their fees, sharpen up their fees, these vehicles are used over the medium to longer term. So if you could shave $500 to $1,000 off the cost of running it, and you compound that over 20 years, it's worth asking the question. And that's really what I want people to take from today. Not whether it is or isn't appropriate, because everybody's situation is different. And I think we'd probably start there. A self-managed super fund is just that. It's a super fund, right? Like cars. We've got utes, we've got sedans, we've got trucks, we've got SUVs, we've got retail super fund, industry super fund, superannuation master trust, and the SMSF is like the Rolls Royce of flexibility. Now, the assumption that these things are expensive is a byproduct of two things. Generally speaking, most self-managed super funds specialist accountants these days will work on a fixed fee basis. Now, that could be agreed between you and the person providing the advice. They could also manage the price in relation to the number of assets in the fund as opposed to the value of the fund or any associated complexities with the assets in the vehicle. Now, as you can appreciate, when I say a standard super fund, I'm talking about a vanilla environment of, let's say, 15 to 30 shares, ETFs, managed funds, term deposits. If you start putting in pink diamonds, antique cars, 4 commercial buildings, your needs are going to be slightly different to those of the average investor. So when I say today, the average cost, including all of it, of a self-managed super fund for a standard portfolio is $2,200 to $2,600, you can't apply that thinking to 5 commercial buildings, 2 residential properties, 3 limited recourse borrowing loans, because you've got a slightly more complicated situation. But when I say your average investor, most people have a self-managed super fund for a couple of key reasons. Flexibility over the investment choice, the ability to control the income generated by their investments to fund their pensions, the ability to manage the use of franking credits inside the fund, and to be able to run multiple pension accounts and accumulation accounts in the one vehicle for admin simplicity and to control the estate planning tax impact to their children. So they are a wonderfully, wonderfully flexible vehicle. Now, if you've got a standard superannuation fund in an SMSF, like I've just said, with shares, ETFs and term deposits, and you're paying more than about $2,400 for the tax return and the audit, then I'd go and ask your provider and say, well, what's going on and why does it cost this, that and the other? And the reason I'm bringing this up today is I've seen numbers this week from $3,950 to $6,500. Now, $6,500 is just highway robbery. Like, that's like turning up at BP and paying $6 a litre. I mean, it's just completely unnecessary. But if people can get away with it, they can. I also want people to understand that there are self-managed super funds specialist accountants out there that do nothing but this. And what a lot of people don't understand is there's a very good chance they can go out to ABC Accounting, say, can you do my self-managed super fund? ABC Accounting gives the super fund to the wholesaler. They do the work, get it back, put a margin on it, and actually haven't done a lot.
Yeah.
Because a lot of mums and dads don't realise that they can go straight to the wholesaler, who will do a wonderful job of engaging with you and act as your tax advisor for that structure and provide a wonderful level of service. You know, and there's a company in Braddon called Aquila, like the shoes, and that is their wheelhouse. They are self-managed super fund accountants who provide an amazing level of service to your retail mum and dad who have an SMSF, who are price conscious, but also want a very high level of service. But 95% of mums and dads don't know that's possible. And I just want people to be aware, because an SMSF, I'm pro SMSF for the right reasons. And as I say, people come in now, sit down in a meeting and say, oh, I don't have a mini. I was like, well, that's okay, because I say regularly, a mini's not going to pull a horse float.
Indeed not. A lot of people that are interested in a self-managed super fund tend to be small business owners, don't they?
Yeah, look, there's the capability to maximise the use of an SMSF, because the small business owner may own the warehouse that they operate their business out of, or the office space that they run their accounting firm out of, or their HR practice. So an SMSF is the only superannuation structure that will allow you to hold physical property, be it resi or commercial. But there are special exemptions in the SIS Act that governs the super world as to how you can acquire and how you can use that asset, because it's of a commercial nature, which is very different to a residential house, which has a different set of rules in relation to acquisition, which is a little bit harder to maneuver. But the SMSF is a wonderful vehicle for keeping your investment costs low. So another big misclaim or misconception that we can squash today is that industry funds are cheap. No, there's nothing cheap about an industry fund, because if you're in the generic balanced option, you could be paying 0.5, 0.6% on the entire balance, depending on the option you're in. Now, if you've got a self-managed super fund with $1 million, $1.5 million, and your internal cost ratio isn't 0.5 or 0.6, it's 0.25, and you've got a fixed accounting and audit fee of $2,400, it's going to be cheaper than a self-managed super fund. And people go, well, is that the only benefit? Well, no, because an industry fund doesn't pay dividends in a generic option. An industry fund doesn't let you control franking credits for your account, because that's all done at a fund level. Now, an SMSF is a wonderful vehicle because it's taxed and tailored structurally for the people in that fund. So if you've got $50,000 or $60,000 of dividend income and $6,000 to $8,000 of franking credits, and you're in pension phase, that's $6,000 to $8,000 of cash that the ATO cuts you a cheque for, because you don't have any tax to offset in pension phase in retirement. So I say to people, controlling income in retirement is vital, because the greatest fear people have is, am I going to have enough, and is it going to run out? So if that's your fear, using a vehicle that lets you control things that combat that fear are really, really important. So you've got good choice, you've got flexibility of control, you've got generally fixed admin costs, and super funds of this nature, they're not for everybody. Everybody leaps in my office, they come in and go, oh, if I'm not in an industry fund, I need a self-managed super fund. But for 400 grand, no. Now, if you're going to hammer a whole load of money in because you're about to inherit 1.5 million and you're 59, then yes, that might be appropriate. But for your average person out there that might have $300,000 or $400,000, this is not the vehicle for you. Just like you can go and buy a Ferrari, but you wouldn't buy one to deliver bread. Mm-hmm. So just because it's available doesn't mean you need to use it, regardless of what Jenny at work says about why she's got one. There's a very good chance Jenny has no idea why she's got one. She's probably got one because Judy has one. Who really knows? But it's very much one of those structures that people want because someone has one and they have no idea why. And today we're just touching on, they are actually a very, very, very cost-effective vehicle for larger balances. And if you have partner and partner bring their super fund under one umbrella, you may be able to get later in life a significant amount of money into a fund and make one of these vehicles very, very cost effective from an investment and an administrative perspective.
Now, we've had previous conversations about self-managed super funds, and I think on one occasion we suggested that maybe they should be called by a different name because you're not on your own.
No.
When you're running this self-managed super fund,
Yeah.
you are in fact engaging the services of expert professional advisors to guide you through the process. And so you're not adrift in the sea all by yourself, are you?
No, look, and I think that's one of the greatest misconceptions ever. People go, but how am I going to manage it? And I said, well, that's why you're sitting in my office, because that's what we do. And they go, oh, thank heavens for that. I think if they change it to self-directed, self-driven, self-structured,
Tailor-made,
anything,
bespoke.
just take the word managed out of it. You know what I mean? It's the word managed frightens people. But in actual fact, you come to somebody like me because you're too busy doing other stuff, or it's not your specialisation. Just like I don't go trying to change PowerPoints at home. Nothing good would come from that,
No.
as anybody that knows me would attest. So it's very much about, again, that myth or that misconception that something is there when it isn't. Because these are, I would say, the best vehicle to use in retirement, whether you're fully retired, partially retired, or looking to try and have control over the tax position of generally what is your greatest asset. But I don't want people saying, oh, I don't want of those, they're expensive. Yes, you have to pay a fee to open them, and that could be anything from $1,500 to $2,500, depending on how you do it. But that's a one-off. So you need to think big picture and say, well, how long am I going to have super? Most of my natural life. Do I have a level of capital that would make it worthwhile? Because if you take that $2,400 and apply it to $1 million balance, it's cheap. If you apply the $2,400 accounting and audit to $300,000 of balance, it's expensive. And that's why I say the larger balances, especially when you bring you and your partner's super together in some situations, and potentially other people, because you can have a number of people in one fund for the right reasons. It can be a very, very cost-effective vehicle with an amazing amount of control and flexibility. And I bet half the benefits of this vehicle people have no idea about, because there's a lot more to a self-managed super fund than cost and return of investment.
Alrighty then, Luke Smith from Envision Financial is with me today. We're talking about self-managed super funds and what is the real cost of having a self-managed super fund or potentially not having a self-managed super fund. It's about 12 minutes to 5. We'll be back with more in just a moment. Well, it's about 8 minutes to 5 now. Luke Smith from Envision Financial is with me in the studio, and today we're asking about how much does it cost to have a self-managed super fund? And Luke, just before the break, I also asked the question, how much does it cost not to have a self-managed super fund? Because if it's the right choice for you, then you could be costing yourself by not having it.
Oh, look, exactly. And that's why I want people to sort of be able to evaluate the true cost of it, because if you were aware of some of the tax benefits in relation to taxable components and recontribution strategies to reduce or mitigate effectively death tax where super is paid to a non-dependent child, a self-managed super fund has a wonderful capacity to fix that over your natural life. And if you turned around and said, well, if I could save X amount of money and keep everything in a single vehicle, which is appropriate for my investment allocations and what I hold. Or if I could reset those components without having to sell $1 of my portfolio. You know, with a self-managed super fund, you can reset $360,000 of taxable component through a recontribution strategy by making a non-concessional payment with $50,000 in the bank. So there's one little example of an amazing saving of tens of thousands of dollars that your kids will not incur if you were to die unexpectedly and pass taxable component to them. Now, a self-managed super fund will let you fix that at $360,000 of value with, 20, 30, 40, $50,000 in the cash account of your super fund. Now, you can't do that anywhere else because you've got to sell down your holdings, open up another account, make a contribution to another fund, not mix the components. Now buy your assets back. Self-managed super fund, you can do that with cash. And that's what I want people to just jump over the hurdle of, well, I don't think it's for me. Anybody that has kids that doesn't want their super taxed at 17%, it's for you. Now, smart people see value. Silly people see cost. So you need to look at, well, what is the real cost of not having it? Because I don't understand the vehicle. And look, as I said before the outbreak, these things aren't for everybody. I'm not saying go out and get these, they're amazing, they're the answer to everything. Not at all. But you need to understand the features of a structure, because a self-managed super fund can invest in stuff exactly the same as the fund you're probably in. But there are some administrative benefits from multiple pension accounts, multiple holdings between account-based pension and accumulation. You could take pension out of one side and make contributions to the other, all in the one fund. Now, there may be significant benefits for doing that depending on how you run your assets. But don't assume it's not for you because somebody at work said they're expensive. I'd argue that's crazy. And if you don't investigate it, that's just a tax on ignorance, which could be far more than you realise. And that's all we wanted people to get from today.
Yeah, and I guess one of the most important pieces of advice is ask an expert, because, either you or somebody who does what you do, because people like me, we don't have a clue. I need to get that advice. And that's the other thing that we touched on earlier, is that don't be frightened of the expression self-managed, because it's not really accurate. You do have professional guidance all along the way. Now, it's just about time to ask where listeners can get more information.
Yeah, so office number 6260-4749. I think we're taking appointments into March now. So you can fight with Steph over a vacancy at the moment, but I don't like
I heard a rumour that, somebody actually got lucky with a cancellation the other day. So,
yes.
That can happen.
Yes, and it can also depend. If you want a name drop and say, oh, listen, I'm friends with this client, that's going to get you right up the list sometimes, because if there is a last minute shuffling, and look, that happens all the time leading into Christmas, very much so. We've got envisionfinancial.com.au on the internet. It's Envision with an E. We've got the Strategy Stacker, Luke Talks Money on iTunes and Spotify. We've got Envision Financial Canberra on the YouTube channel, where we've got all of the shows and you can watch them on your phone. We've got the Tiki Taka handle, the Strategy Stacker, we've got the YouTube Shorts, and we've got Smart Money Strategy, your ultimate guide to financial planning, where there's an entire chapter on various super funds, their features, their benefits, their considerations. So there's a little bit of something there for everybody.
Smart Money Strategy, your ultimate guide to financial planning, in all good bookstores, also available online, and of course, an excellent Christmas present.
Wonderful Christmas present.
It is that time of the year.
Just saying.
Indeed. Luke, thanks very much.
Pleasure. See you next week.
Luke Smith from Envision Financial, back again at the same time next Friday afternoon to talk financial matters once again. Right now.